Okay, everybody, here we go. It is me, Gregory Mannarino, Thursday, July 27th, 2023, and this is my lovely pre-market report. Let's start off with this. I want to put a couple of things together here so you and I could have an even more clear picture as to what's going on. So yesterday, as we all expected, the Federal Reserve did raise the federal funds rate 25 basis points. Big freaking whoopee-doo. We knew this was going to happen. It's a token hike. It's not meant to do a damn thing. Again, if you were to turn on Fox Business, Bloomberg, CNBC, they're playing this up as if it's like the second coming or something along those lines. This is, the Fed is very serious about doing something about inflation. This time they mean it. I mean, you can't make this stuff up if you try to. Inflation is going to continue to rise for a multitude of reasons. I think the number one reason, possibly number one, why we're going to continue to see inflation rise is because the U.S. dollar is in a death spiral. I think we're clear on that. As a matter of fact, let me extend that a little further. Every single central bank issued currency is under attack by their issuing central bank. Again, they're continuing to inflate because there's no alternative. We've covered this repeatedly on here in this blog, especially as of late, and it's not going to stop. But you'll never, ever hear this from any of the mainstream propaganda ministries, but it's a fact. Central bank issued currencies, none more so than the dollar, for a multitude of reasons that we've covered here, they're in a race to the bottom. So understanding that alone should make it clear to you that no token increase of 25 basis points or 50 or even 1%, how's that, is it going to make a damn difference? You have the issue, again, multiple issues at multiple fronts. Not only are central banks going to continue to inflate and find every reason imaginable, things you can't even dream about, to continue to inflate, you got this issue with commodities and crude oil. Crude oil, you and I have known about this for a long time, is going higher. It's going much higher, and thousands of products are made with crude oil. So you have to reach deeper into your pocket. We have the issue with housing. Real estate prices, although there's no demand. Demand has now fallen for 17 consecutive months with regard to real estate or housing, not commercial. Let's talk about commercial real estate on another episode. But real estate's starting to rebound here. People cannot make ends meet here. We have loan defaults at a historic high. We have people applying for credit right now, more so than we've ever seen before, and they're also being turned down. This is typical prior to every single economic downturn in history. Please look this up for yourself. We have this yield curve which is screaming. I mean, like from Pluto, which used to be a planet, but now it's not a planet. I don't know what it is, floating out there, whatever, that we have a serious problem here. But imagine my shock. Imagine your shock. I'm shocked. No, this is deliberate. You know what's going on. The Fed is attacking the middle class here in the United States. The central banks around the world are on a mission to wipe out an entire class of people. But they're also determined to prop up the stock markets. Again, let's just take this in. So the Fed raised rates yesterday. Meanwhile, the 10-year yield came down slightly. The dollar, as I am doing this on a relative strength basis, is lower. Okay, the dollar demise, in my opinion, is going to accelerate moving forward. Although keep this in mind, as I have outlined, as we have discussed right here over and over again, the dollar is going to remain the prettiest belle at the ball for a while, for a long while. So just realize that the eventual erasing of the dollar as the world reserve currency, I think the writing is on the wall. It's just a matter of how it's going to play out. And in my view, the only way the dollar will be dethroned would be with a full-on hot war, and millions of people would, of course, be sacrificed here because the Federal Reserve is not going to give up that power very easily. And they will fight tooth and nail with our blood and guts, the blood and guts of our children, of course, to keep the U.S. dollar as the reserve currency. It's kind of a disgusting kind of a situation, but that's the way it is, and I think we're pretty clear on that as well. All right, so anyway, as I said, we got this token rate hike yesterday. It's not going to do a damn thing about inflation. The dollar is in decline, a serious decline. It's not going to stop because central banks are going to continue to inflate and everything else connected to it, as we have discussed here. This morning, stock futures are higher yet again. If we do finish the market higher today, this would be the longest streak of gains for the Dow Jones Industrial Average, I think, in almost 40 years. Imagine, again, an economy in literal free fall, a consumer getting wiped out, and a stock market that continues to defy gravity. No surprise to you. We've covered this since time immemorial. The gap between the market and the economy is going to get even greater. See, if you were to look at just right now how this is playing out, again, we have this issue with the 10-year yield coming down after the Fed raised rates. Imagine my shock. Imagine your shock, and a weaker dollar. The market is convinced right now that the Fed is going to keep the easy money going. The market is convinced that risk in this market is going to be managed, because this is a managed market, by the Federal Reserve. And that means the stock market will go higher despite anything else. It doesn't matter, again, earnings, PE ratios, forward guidance, all the stuff that's supposed to matter in a real market does not matter anymore. Now let's look over at commodities. You got gold, silver right now catching a bid. Cryptocurrency is catching a bid. Crude oil, as I said, going much higher here. The setup is very simple to understand, and it allows you and I to stay ahead of the curve. With regard to the market, okay, it's no secret. I have been net long this market for years, okay? My largest holding with regard to exposure to the stock market is ticker JEPI. You all know that. At least I think you do. If you follow this blog, you should be aware of that. Why does Greg like this? I like the structure of this exchange-traded fund. I also get paid a dividend every single month, so a nice little cash flow for me. You know what I mean? Okay, what else do you need here? What has Greg been saying or beating to death for months now? Commodities, commodities, commodities. You need exposure to commodities, people, in my view. I posted several newsletters in my free newsletter, link in the description below, of exchange-traded funds you might want to look at. Gold, silver more specifically, bet against the debt. Become your own central bank here. Look at suppressed assets. Again, look. What they're doing now by keeping rates suppressed, and this is going to continue at least, I think, through the re-election campaign of the thing sitting behind the Resolute desk. Okay, they're going to prop up the stock market, creating greater and greater distortions, and that means greater opportunity. You understand? Because all this is not sustainable here. The global debts and deficits ballooning out of control, a hyper bubble in the debt market beyond anyone's wildest dreams, which is supporting a super bubble in the stock market. We're pretty clear on that. At least I hope we are. But this is going to turn at one point. It will turn. We don't see normal market cycles anymore. Generally, we don't get corrections anymore. We don't get pullbacks anymore. And that's because, again, this euphoric state of the stock market believing sincerely that the Fed is going to keep the easy money going, until whenever they decide to pull the plug. So you and I need to take advantage of this. I don't know another way to put it. And we're going to stay ahead of the curve, period, the freaking end. Anyway, so what's the takeaway from today's video? Well, something that I think you're all aware of, but we need to focus on maybe a little bit more here. The demise of the U.S. dollar is absolutely accelerating here. Although, again, on a relative strength basis, the dollar is going to look really pretty. But its purchasing power is going to continue to be sucked out because that's the goal here of the Federal Reserve, and every central bank is trying to kill their own currency. They're doing this by design to issue in a new cross-border, worldwide currency. You understand? This is what they're doing. One world government, a one world system, a new world order. I think we're all pretty much aware of that. Anyway, that's where we're going. And I believe that most of you would have to agree with me on this. All right, people, with that said, we covered a lot here this morning. I want to hear from you. Am I getting this right, or am I totally wrong? I will read the comments. Let me know what you think about all this stuff here. Please do share the video. Those thumbs up are very valuable. Please get this stuff out there. You're not going to hear this anywhere else, pretty much. All right. So this guy here loves you a lot from the heart. I will see all of you 4:05 p.m. Eastern time for my live stream. Have some questions ready for me, and I'm looking forward to seeing all of you later. All right. Take care.